Gene, what do you want to know from Tim Cook?
Well, before that, Melissa, I'd like to step back and clarify. I think there's a couple misunderstandings here. First is the lack of guidance, this lack of visibility. Apple hasn't given guidance since the pandemic started, so this is consistent with what they've done before. Second is the iPhone miss. We've talked about that it's because of the timing of iPhone 12, missing a couple weeks in the quarter, but we haven't really qualified what that impact is. And Josh Lipton said something important in his interview with Tim Cook, mentioning that the iPhone was growing in low single digits by mid-September. That's really when the comps start to get kind of goofy. So if you add in that 3%, assume it was on a trajectory to grow at 3%, and you look at Apple's overall revenue growth rate, you're going to get to 14, 15% year over year in the quarter. That's a step up from 11% in the June quarter. So actually, their growth accelerated. And you could argue that that is to be expected, given what they're benefiting from work and learn from home. You could argue that that is an achievement because of where the world is at. I tend to favor the second perspective, that this is really impressive what they're doing. And I would like to be the first to weigh in on Tim's question, which is what's the right multiple for Apple? And ultimately, I think it's a 35 times. It's a premium to the rest of tech. And the reason is that the hardware, software, Dan, you mentioned that the services business is just software. Eventually, Apple's going to have a hardware as a subscription business. They're going to one and done 3 years from now. They're going to extend what they're doing right now with their other bundle. I still haven't answered your question, Melissa. I can get to it quickly. What am I expecting from the call is not a lot. They're not going to really say much. What everyone's keyed in on, Josh has already illuminated it, is that the iPhone, at least the 2 versions that they're already shipping, are off to a good start. That should pave the way for iPhone growth in the high single digits in December. And then, as Tim said, we're off to the races because this is a 3-year upgrade cycle.
All right, Apple shares right now down 4.4%. Let's get on with Amazon here. The stock is moving lower in the after-hour session. Leslie Picker's got the latest. Les.
Hey, Melissa, that's right. That move, despite a very solid beat on both the top and bottom lines, and guidance coming in ahead of expectations as well. Still, those picky investors out there are looking at growth in Amazon Web Services slowing to about 29% year over year. That's giving some investors some pause today in the aftermarket. Now, the media call with the CFO, Brian Olsavsky, just ending. They really got into some of the various impacts of the pandemic on the call. He was asked about the company's ability to fulfill holiday orders. Olsavsky said they're not totally insulated from the capacity constraints facing the logistics industry as a whole. He mentioned that Amazon had a, quote, good dry run from Prime Day a few weeks ago, and that they have invested $30 billion in CapEx aimed at operations to smooth this. He also spoke about COVID-related costs, which the company expects to be around $4 billion in the fourth quarter. That's up from $2.5 billion this quarter. It includes productivity costs from work from home and social distancing, as well as things like cleaning supplies. Now, Amazon shares are up about 76% this year, although they've been pretty range-bound since July. It doesn't appear that today's numbers, though, are enough to give that stock a boost out of the range, Melissa.
All right, Leslie, thank you. Leslie Picker. I'll go straight to Gene on this. And Gene, it seemed that when Amazon releases fourth quarter guidance, that's when the stock reversed in the after-hour session. What did you make of this quarter?
Surprised to see the reversal. 37% top-line growth, just really impressive. Assume that they're going to hit or exceed the top end of their guidance for the December quarter. That implies 38% year over year. So assume essentially that it's overall, it's flat. I think I was really impressed, and at the end of the day, it's just an expensive stock. This is going to be an expensive stock for a long time. There wasn't anything wrong with the quarter. The AWS number, people are searching for a reason to be negative when they're talking about that. It was still a fine number.
Yeah, it was right in line with what analysts were expecting. Karen, you bought a little Amazon yesterday. How do you feel about your new purchase?
You know, I'm sort of mixed feelings because you don't want it to be down, but I'd like it to be, if we were going to be down, I'd rather be down a lot and buy more. I agree with what Gene was saying. I don't think it was particularly disappointing. Also, I don't think of Amazon as I think of them as an under-promiser, over-deliver. So if the guidance wasn't as good as people hoped, that doesn't bother me. I'd like to buy more. So actually, I wanted to trade down.
We have been in a position, Guy, where the stock seems fairly stable in the after-hour session. Then you go into the conference call. They say something about how much money they're going to spend in the coming year, and the stock gets torpedoed. I'm curious, Guy, what your take is, and if you think there's a tape bomb to come.
I think they get I mean, honestly, I think at this point in the cycle for them, they get a kick out of it. I think they really enjoy the seemingly the power they have over the stock price. I mean, that's my sense at least, because to your point, you've seen it on both sides of the ledger. This is my takeaway in the quarter. I mean, 6.5%, almost 6.5% operating margins is just a staggering number given what's going on in the world, and blew away what the street was looking for. Your point is the guidance. I mean, I don't know, good for Apple for not giving guidance, and I understand Gene's point, but, if you're going to give operating income guidance somewhere between $1 billion and4.5 billion, why even bother? That would be my pushback, and I think that's why the stock is lower. Couple things. The armchair technicians will say, you had a 3,500 top back in the beginning of September. We tried to breach that again, seemingly have failed. Where do you buy the stock? We're basically back to where we started at the beginning of the day. I'd be concerned if we close below 3,100. Otherwise, I think this stock is still viable here, Mel.
Operating income guidance that's kind of a wide range. I mean, as ranges go, 1 to 4.5 billion, Dan. I mean,
you could drive a Mack truck through that thing. I mean, listen, that's what we've become accustomed to, and I think when the stock, when they report at the upper end of that guidance or beat, then the stock usually does well, and when they come into the low end and then guide similarly worse, then the stock is kind of heavy. But listen, this is one of these names where I think the smartest investors in the world want to buy this thing on every dip. I think that's proven to be the case. It's really interesting that in March, on the way down, when a lot of stocks got cut 30, 40% in line with the S&P 500, it really outperformed on the downside. It was one of the first mega cap stocks to make a new all-time high, I think, in April. So this is one where, we talk about the market has a Fed put. This has the genius tech investor put. They want to buy this thing every single pullback. So I just don't think it's a great name to short on valuation. I think it's probably a better name to buy on pullbacks.
I mean, it is a little surprising that the pullback is not greater in the after-hour session. If there was disappointment in the guidance, or if there is this sort of sell the news sort of mentality in the market at this point, considering the selling pressure that we've seen earlier in the week, you would think that this would be a place where people want to take profits after what Gene called was an okay quarter. Tim.
I do, but again, that Azure number was actually, relative to Azure, that AWS number, I think was better than expected. When you look at the investment that they've made in fulfillment and logistics, and people start complaining about margins, this is why Amazon is who they are. And the most important thing about Amazon this year and why they hold these numbers is that e-commerce in the United States is going to be up 49% in 2020, and Amazon is going to be 50+% of every package that's delivered in the holiday season from their own fulfillment and logistics. They own it. And again, a rising tide is taking the biggest boat in the ocean, and I think that's why, well said by Guy, people and Dan, people aren't getting too far away from this stock on weakness.
Shepard Smith here. Thanks for watching CNBC on YouTube.